When people hear the word offshore, they usually picture something exotic or complicated. They imagine islands, secret accounts, or something out of a movie. But here's the truth: offshore simply means outside your country of residence. That's it. If I have a business in Africa, that's an offshore business. If I own a property in Sydney, that's an offshore property. It's just a matter of geography, not secrecy. And for many investors, it's also about tax efficiency. Offshore platforms operate in tax neutral jurisdictions, meaning your investments grow without being taxed at the offshore level. And for high net worth investors, especially here in the Middle East, offshore investing is one of the smartest, most flexible ways to grow and protect your wealth. Today, I'm going to walk you through how you can invest in structured notes using offshore platforms safely, securely, and strategically. So let's get started. First of all, structured notes are financial products, and to buy any financial product, you need a platform. For example, if I want to buy shares of Tesla, I don't go to the Tesla showroom and say, "Give me one share." I go to a broker, maybe a bank or an investing app like Interactive Brokers or eToro, and I buy it there. Structured notes work the same way. You don't go directly to JP Morgan or Goldman Sachs, you access them through specialized platforms, just like you use eToro to buy Tesla shares. And many of the best ones, they are based offshore. These offshore platforms are simply located outside your country of residence, often in well-regulated tax-neutral jurisdictions like Isle of Man, Mauritius, Cayman Islands, Jersey, Singapore. These locations have strong investor protections, stable legal systems, and no local taxes on capital gains or income, making them ideal for international investors. One of the biggest advantages: your residency doesn't matter. You might be living in UAE today and move to Saudi Arabia, India, or Europe tomorrow. Your investment stays exactly where they are. No liquidation, no complications, just seamless access wherever life takes you. Your account isn't tied to your visa, your residence, or your local bank. It's a global, mobile, and typically denominated in strong currencies like USD, Euro, or GBP. This is especially powerful for expats from countries with currency depreciation concerns like India. Another major benefit for investors in the Middle East: local Sharia inheritance law doesn't apply to these offshore structures. That means you can nominate your own beneficiaries and ensure your wealth is passed on exactly how you intend. Finally, going offshore also helps reduce concentration risk. Instead of being limited to local assets, you gain exposure to global markets, sectors, and instruments, giving your portfolio more resilience and growth potential. And that's not all. These offshore platforms aren't just flexible, they are built on a rock solid legal foundation. All of them operate under a structure called an SPC, a segregated portfolio company. Now, what does that actually mean? The money you transfer to them doesn't sit on their balance sheet. Even if the platform itself goes bust, your money stays safe because your assets are legally ring fenced, meaning they are kept entirely separate from the platform's own finances. Think of it like an escrow account in real estate. Your funds are held in trust, not mixed with the developer's cash. Same idea here. They earn money through service fees, not by owning or managing your capital directly. And just as importantly, the platform isn't the custodian of your assets. That role is handled by independent, globally trusted banks. For example, Capital International Group, the Isle of Man platform where we often use for clients, works with BNY Mellon as their custodian. So your investments are always secure, auditable, and protected by multiple layers of oversight. Now you might be wondering, how do you actually open one of these offshore accounts? Opening an offshore investment account is simpler than most people think. Here's how: the process usually works. Step 1 is choose a platform. Now, this depends on your goals and preferences. Some of the platforms we use with clients include names like Capital International Group, which are based off Isle of Man. The second step is submit KYC documents. Just like opening a bank account, you will provide your proof of identity, proof of address, and source of funds. This is part of international compliance and it's standard across all regulated platforms. In fact, KYC or Know Your Customer and AML or anti-money laundering checks are getting stricter across the board. And that's actually a good thing for investors because it means the platforms you are using are serious about compliance and security. And yes, the process takes a bit of time, but it's all about ensuring your investments are secure, auditable, and fully compliant. Step 3 is account activation. The whole process is digital. You don't need to travel anywhere. Most accounts can be opened remotely in just a few days, and it takes around 1 to 2 weeks for the account to be opened. We guide you through every step so you are never left guessing. Step 4 is to fund your account. Once the account is opened, you wire funds directly from your personal bank account in your preferred currency, usually USD. And since these are global platforms, they accept transfers from banks all over the world. Next step is my favorite. You can choose from pre-designed structure notes or we can build one together based on your goals, risk appetite, and market outlook. This is where we come as your advisor. It's not about randomly picking a note, it's about finding or creating one that fits you. We start by understanding what are your financial goals. Is it early retirement or generation wealth or capital protection? How much risk are you comfortable with? What kind of returns are you targeting? And what time horizon works best for you? Based on that, we either select a note that already exists or create a custom note just for you. In fact, every week we structure 5 to 7 new structure notes tailored for different client profiles. And based on your preferences, I'll show you which one might suit you best. Or we can design something completely new altogether. The last step is step 6, where we execute the trade. Now, once you are happy with the structure, we go ahead and place the trade. The note is issued, documented, and settled all through the platform. You will receive complete legal documentation, including the ISIN code, term sheet, and trade confirmation. This entire process is secure, trackable, and governed by regulated financial institutions. You're not investing in something exotic or shady. You are using a system trusted by family offices, private banks, and high net worth investors around the world. Now, every investment carries risk. Here, the risk does not lie in the platform since they are SPC companies, but lies in two places. The issuer of the note, the bank that creates it, example JP Morgan or Goldman Sachs, and 2, the market movement. If the assets linked to your note underperforms, it could affect your returns and capital. So here is the big takeaway. Offshore investing isn't about secrecy or complexity. It's about structure protection and global flexibility. For high net worth individuals, especially here in the Middle East, it's one of the most powerful ways to grow wealth with confidence. The structure notes offer custom returns, SPC platforms offer legal protection, and offshore custodians ensure institutional grade security. It's not about chasing risky trends, it's about building something solid, secure, and long term. If you are exploring smarter ways to invest without relying on guesswork or volatility, this might be the path for you. And I have recently created a short video on how you can create consistent and predictable growth of your investment portfolio with a high level of capital protection through structure notes. You can check out the video by clicking the link in the description. See you soon.